I hope you are all ready. This is going to be a wild, wild, wild week with a lot going on. And as a result, I will be here to help you through it all right here on the Atomcash Shingle. So make sure you hang around. We're going to have a great show today, tomorrow, and on Wednesday, and maybe even a little bit more. So make sure you stay tuned. Here we go.
The time has come, it's almost here. Another day on the markets, approached with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel the run with a fire that never dies. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. No time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the financial firepower that you may be missing. Now, whether you're new to trading or trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Boom, we're rushing through the intro because we got a lot to talk about. It is going to be a busy week. We have over 30% of the entire stock market reporting earnings this week. 30% of the NASDAQ reporting earnings this week. We also have FOMC on Wednesday. It is a busy week. The market made a new all-time high on Friday. It is now making another new all-time high in the pre-market. We're going to quickly run down everything we got on watch for this week. Then we're going to go into the market, see what's going on, and we're going to try to get as much done before the market opens. And I have other positions we're going to talk about as the market opens. Anyway, it's going to be a wild one. I'm going to be live today, tomorrow, Wednesday, and maybe sprinkled out throughout the week because this is going to be a busy week. You're going to want to be smart. I have some sage words of wisdom as well for those of you that are day or swing traders, more shorter term traders. We got a lot to talk about. I've got a whole docket of stuff. So first, let's go through what I like to do, especially on a Monday. It's our catalyst watch. So we're going to keep an eye out and see what's coming down the pike this week. Now, I already mentioned FOMC, but let's look at specifically today, tomorrow, and then into Wednesday, and then obviously finish up the week. For today, surprisingly, pretty quiet. The week starts off quiet. Now, or I shouldn't say the after hours, overnight, Trump is meeting with Japan's prime minister. That's something that could affect the markets. You want to just be knowledgeable of that. That's scheduled at 8 o'clock tonight. But outside of that, nothing really intraday that should affect the markets, at least that is scheduled, right? So that's what it's looking like for the day so far. Now, as we roll into later in the week, and as I like to tell you guys, that Tuesday to Thursday tends to be the really busy kind of day, especially when you have a heavy week like this. And this week is no exception. We have United Health earnings in the pre-market tomorrow. We also have Trump is meeting with some business leaders in the pre-market at 6 o'clock. We have PayPal earnings tomorrow morning, pre-market. Then when the market opens, we have consumer confidence at 10. And I'm just highlighting the big ones that you guys got to be aware about. Intraday, consumer confidence really seems like the only thing to really be mindful of. Outside of that, when we move into the after hours, we do have Visa earnings on Tuesday, and that's about it. So Tuesday, we ramp up a little bit, but nothing too crazy. Wednesday is when things starts to hit the fan a little bit. You have the Japanese consumer confidence. Now, other people probably aren't going to be talking about this, but you do want to keep an eye on it. For those of you who don't know, Japan in general carries a lot of U.S. bonds. So how their market is doing in general can affect our market. Obviously, it's way more complicated than that, but when we see stuff like when we see Japan's consumer confidence data come in, kind of just want to keep an eye on that because it could hint how their economy is doing, and conversely may affect our economy. Now, I'm just saying may because we're sitting at all-time highs. Things are very lofty. Doesn't mean they can't get more lofty, but these are the things we at least want to be aware of. So that is earlier in the morning. That's 1 a.m. for us here on the East Coast on Wednesday morning. Fast forward through Wednesday morning, you do have Caterpillar earnings and Verizon earnings and Boeing earnings. So those are the big ones to watch in the pre-market on Wednesday. Wednesday during the day, not too much with the exception of FOMC. As you guys know, that happens at 2 and the press conference at 2:30 with Powell, obviously. And then Wednesday is when things really start to hit the fan. Wednesday after market, we've got Meta, we've got Microsoft, we've got Apple. Meta, Microsoft, Google, Starbucks, eBay. 3 big ones there, 3 massive ones there, Meta, Microsoft, and Google. That's going to be huge. So if you're swinging overnight or anything like that, which we'll talk about in a little bit, you want to be very mindful of going Wednesday into Thursday, especially if you're long anything tech related that could impact your holdings, especially if it's mixed or they all go one way, up, down, whatever. Obviously, that's something you need to be aware of, obviously. Going into Thursday, Thursday morning, not too much going on in the early morning. As we head closer to market open, we are supposed to be getting GDP data quarter over quarter. We'll see if we actually get it. Again, with the government shutting down, certain data is available. I'm not going to pretend like I'm a macro expert. I'm not. But certain data is available. Certain data is not available. So I don't know. I haven't looked into it very far. So we could get that data. We may not. I'll look into it later today. Then you also have, for those of you investing in healthcare, you have Merck and Lilly earnings pre-market on Thursday, along with MasterCard. So you want to keep an eye on that as well. Heading into market open on Thursday, pretty early, like nothing really going on. You do have the European Central Bank, their earnings statement. So we have FOMC on Wednesday, and then you have the European Bank's interest rate decision on, we have FOMC Wednesday, European Insurance Bank on Thursday. So kind of a double whammy there. Obviously, the European market's not going to affect the American market as much, just like the Japanese market won't affect the American market as much. But these are things to take into consideration. Obviously, you want to rank it in some level of importance in your mind and just be aware that they're happening, if anything at all. Again, big day on Thursday. After hours, you got Amazon and Apple. So we got, what's that, 5 of the Mag 7? We already had Tesla report. So we've got 5. That leaves everyone but NVIDIA. And NVIDIA tends to report late anyway. But Wednesday and Thursday is going to be a big week for the Mag 7, which obviously means it's going to be a big week for SPY and the Qs. So you're going to want to watch that. Amazon and Apple after hours on Thursday. Then rolling into the end of the week. Nothing too much. Pretty quiet in the morning unless you are an oil investor. I am actually currently long some oil right now. It's actually the highest short interest across the board that it's been for quite some time. So I took some long exposure on oil. I actually already made some profit on that. Long Oxy. From the low 40 area. It was trading at 42, 43. I took a trim on some call options. So I'm actually exposed long right now on oil at the moment with some swings. We have Chevron and Exxon reporting on Friday. So personally, that's something I have an interest in. So I'll be keeping an eye on that. And also AbbVie, for those of you in the healthcare sector, you want to keep an eye on that. As well as PCE and consumer spending pre-market on Friday. Outside of that, Friday towards the end of the day, you kind of fall off a little bit. You have the Chicago PMI, but don't really care about that. So the week is going to go like this. You're going to start off slow. You're going to do a bell curve, come back down. So Monday should be fairly quiet. Not that Friday is quiet, but in terms of catalyst, Friday will also be quiet. The meat of the risk of the volatility this week is obviously going to be Wednesday and Thursday when we have 5 of the Mag 7 names reporting all after hours plus FOMC. That's quite a lot. So expect a very, very volatile week, but that doesn't mean that there aren't going to be opportunities to take advantage of said volatility, which we will walk you through today, tomorrow, Wednesday. And if you stay tuned, if you're subscribed on YouTube, you follow me on X, wherever, we're going to have some little surprise streams maybe sprinkled in there, maybe Power Hour. Maybe we'll do a dry run, a test run of the Atomcash After Dark show, which is going to be after market close. So maybe something like that. So make sure you're following me, subscribed wherever you want if you want to stay up to date on when I go live. That way you're aware, and obviously I'll put a message out there for you guys as well. Good morning, Toby, in the chat, thanking me for the fact that I'm live because of the fact that the Europeans apparently set their clocks back 1 week before us Americans. So that's something, I believe that's the end of the week for us, that we're going to set our clocks back. There we go. So that's something we want to be aware of. All right, as we're leaning into the market open here right now, SPY sitting near the high. The pre-market high was 683.24, currently trading at 682.89, so just about like 40 cents or so under the high in the pre-market. Getting a nice little pump here right before the open. Got 4 minutes until the open right now. Q's also up, actually leading the pack right now, up about 1.27%, and also IWM up a good percentage as well, up 1%. So pretty solid actually across the board. Interesting thing to note is that the Q's and IWM are actually leading the pack over the SPY. Which at least obviously that can change, but this is showing a lot of risk on behavior in my mind. And I actually said this morning in our morning thoughts in our Discord community that risk on behavior seems to be coming back into the market near term here, which again we will talk about here in a little bit. But seeing money flow into tech, obviously the Q's being up, seeing small caps getting a little bit of bump here in the pre-market, and obviously we had the U.S.-China trade deal, or I shouldn't say obviously, maybe some of you guys don't know. We tentatively have some level of a trade agreement with China, nothing obviously hammered out permanently, but we have some level of an agreement. The market likes that, obviously. It means things are a little less risky, a little more risk off. So that leads to a decent gap up on the market. Obviously, and seeing that the Qs and the IWM are up in a greater percentage in relation to the SPY gives me the inkling that the market's looking to take more risk on behavior, at least at this juncture. And again, obviously a very big week, so you want to be very mindful of that. But as we analyze and go through the day here, we'll be able to find those opportunities and see where to move risk on in general. Now, I personally have a few positions I'll be keeping an eye on at the market open. I actually took some open $8 calls as of Friday, expiring this week. So very short expiration on open, currently sitting about 30 cents in the money right now. I opened those at around 67 cents. They closed at 54. The contract's right up there. I've also got an eye, I mean, some of you guys have been watching the show, but I got an eye on a slew of companies right now. I have what's called the swing cannon in our Discord community, where there's certain times where I line up opportunities that are swing opportunities and I load them up. I do, maybe occasionally I'll have like 3 to 4 active swings, especially that I alert in our community. And when I load the swing cannon, it typically I go from my normal size of 3 to 4 and I double it 8 to 12, or I go much larger because I see a greater opportunity in swing plays over day trading, which again, we will highlight after market opens, after things cool down a little bit. Stocks to keep on watch this morning, Pinduoduo, obviously on the back of that Chinese potential trade news. One of these companies is going to take very great advantage of this if there's a U.S. trade deal. Obviously, they're Temu, so they want a trade deal because they want to sell to Americans. I'm currently, just full transparency, I'm currently long 135 calls on Pinduoduo expiring November 7th. Contracts right there. Currently trading in the money right now around 137-ish, just a few cents shy. Also keep an eye on UUUU. This is down right now. Now, because of that trade deal, this actually could see some bearishness. There was a lot of bullish flow, a lot of money going into this name. We could talk about that at a different juncture. Maybe I'll do a little segment on it later. I have mixed feelings on this and where it could go. Full transparency, I am long UUUU, $25 calls expiring this week, which I plan to close out today or tomorrow. We'll see. I have mixed feelings on this now that we have that U.S.-China trade deal, so that could change things a little bit. Those are the two I really want to keep on watch for you guys today, as things may be a little bit more volatile as we have more of like pumpy things and open. Which is getting a little bit of a dump now. But these are the more like pumpy-ish names that should move pretty well in this environment, at least in my opinion. But most importantly, we're going to keep a tight eye on SPY as we get into the market open here, as the market is about to open.
The market is about to open. It's
And the market is open right now. 682.73 right now is our open price on this beautiful Monday morning. I should have a cool graphic flash on the screen for that little song, but hopefully you guys like a little jingle. But the market's now open right at 682.70 right now. Again, the Q's holding up. Nice little pump here on the Q's right at market open. IWM actually coming down right in the early goings here. Nvidia right now near that 190 level. Keep a tight eye on that. Google with a healthy push up near 266. Microsoft at 531. Apple right now trading 266 about. Moving up. I'm getting alerts left and right. New all-time high here on Apple. Tesla looking pretty good at 440. Amazon, big mover above that 221 level that we've been talking about ad nauseum right now at the top of this range here. So you could get a solid pump on Amazon north of 228 here. And Meta looking pretty good as well. So all your Mag 7 names seem to be pushing pretty solid here into the market open. Another gap up. Look how gappy this is already on the SPY. Gap up again. It's strong. Some sort of a cool down would be nice, but hey, I'm not going to complain. We just keep going to the up. We just keep going to the upside. No complaints here. Whew, LBRT. This is something I'm also long on right now. $16 calls. Currently trading 1741. That is a beast, and I'm going to close some of these out right now, especially for our small account. We have a seed decree account, we call it, in our community. It's our small account that I trade with us here. These calls were opened at $1.20, currently trading around 196. I'm going to move. Let's see what we got on the bid ask right now. That's a crazy spread. I'm going to see if I can get a fill at $1.80 on these to close it out. I'll park that order and we'll move on with the rest of our day here. If I get filled. Oh, did I get filled right away? I think I got filled. Did I get filled? Woof, got filled. All out. Beautiful. All right, let me put that out for our members in our community. All out LBRT at 180. There you go. So that was $60 a contract. Those were open at 120. So whatever that math is, do it real quick. 50% gain, not too shabby. I will take that to the bank every day of the week. Thank you for coming. Thank you, thank you, thank you. My open contracts are still red, but again, those are $8 calls for this week. Other things I'm watching, Path had got a lot of news over the weekend. These $20 calls specifically got a lot of volume. And that's something that interests me, that we see that these contracts were bid up quite a bit. Full transparency, I am long at a 134 cost basis or 133 cost basis on those contracts. So that's something to keep a tight eye on if you have any interest specifically in Path. Excuse my click-clack in here for a second. I'm just managing a few things in my personal portfolio, and then we'll get back into the market. Sorry, if I get a decent trade, I'm obviously going to take my profits here. So excuse the momentary silence as I realize and make my money here. Beautiful, beautiful. Ooh, those pin duo calls up 36%. Gotta love it. Got to love it. Where's pin duo? Very volatile here. Getting along the 135s. Not sure if I talked about this on the program because I don't think I was live later in the week. But this is something you want to keep your eye on. Like I said, huge spread. You want to, if you are trimming these, you either want to aim towards the ask or you want to wait till later in the day when the spread kind of tightens up just a little bit, because obviously at market open, things are going to be a little bit more volatile. Let's get back into the market, though. I'll keep an eye on all my plays and everything in a little bit. Everything's got time except my open contract, so I'll just watch that closely. But at the open here, SPY's not really going too much of anywhere. We're pretty flat here at the open. Watch your LOI, or I'm sorry, your POC here, 682.85. So that's like your pre-market POC. You see this green dotted line here? So that's, again, our volume traded by time, not traded, I'm sorry, volume traded by price, not traded by time. So that's showing us in this realm of time, which doesn't include all of our pre-market trading. If we really want to squeeze it in there, there we go. So we include all of our pre-market volume. Our POC is at 682.74, which is literally where we are right now. So the most volume in the entire morning is traded at this price. So above it, that could be treated as an area of support. Below it, will be treated as an area of resistance. Currently, it's just an area. We're ping-ponging around it. The market's trying to decide if it wants to go up, if it wants to take some profit, whatever you want to do. It's very, very, very ping-pongy in this little range here. So I'd be pretty cautious here on the open. Again, not rushing. It's Monday morning. Volatility is going to be higher. And when I say volatility, I mean IV on your contracts. Currently, though, not too shabby. Rolling IV is actually almost 15%. So your 52-week IV across SPY contracts right now is about 15%, not bad. And your 0 DT at the money IV right now is in that range. So actually contracts are priced appropriately considering market volatility. So that's not necessarily a bad thing. That's pretty solid. IV percentile right now is at 30%. So that means the last rolling 52 weeks, the market has been more volatile 70% of the time than it is right now, which is actually a good sign as well. So if you are someone who wants some sort of exposure, whether long or short, on the BTO side, so buying to open contracts, this is actually not a bad time to consider buying in, at least in my opinion. Whether you're long or short, doesn't matter. Buy to open contracts are priced at least fairly considering volatility, and I should say IV specifically. Let's see. QQQ moved up, came back down. Not too much to see here. Again, moving down a little bit here with the SPY. I would anticipate a little bit of weakness on the open, considering the gap and then the other gap. It's a little parabolic. And some people obviously would look to take profit on the, what do I want to say, the China trade news and whatnot. Doesn't surprise me. I anticipate more gappy candles with the rest of this week, as I kind of alluded to in the beginning. So we'll see here. We'll keep a tight eye on the SPY and see if we get a little bit more weakness. IWM right now actually showing a reverse trend of the Qs. So we're seeing divergence right now between our small caps and the Qs at the moment. Obviously that can change, but at least right now that's actually showing that some strength is trying to come through small caps comparatively to the Qs, although the Qs are up a larger percentage. But just in terms of price action at this point in time, IWM is reflecting more strength. So your small caps, your Russell 2000 names are reflecting more strength at this point in time than the Qs are, at least for right now. Looking at the VIX, we're trading at a 1587 on the VIX. We're below this 1637 LOI on the VIX. Pretty solid. I actually don't have, I don't really have many or any LOIs down here for volatility. And that's, for those of you that watched the program maybe the last week or two, I've mentioned that during the Trump presidency, VIX sits around 14, 15, sometimes bumps up to 16. So this is a comfortable range for volatility to support a bull thesis to the upside on the overall market. So this isn't necessarily a bad thing. It's just this is where volatility should be if you're bullish. So not a bad thing. We also have a support here from VIX, so VVIX, so this is the volatility of volatility. When this is under 100, things tend to lean more bullishly. Volatility is less likely to get more irrational, to get more volatile. Consequently, things tend to be more calm and steady, which typically supports a bull narrative in the market. So seeing VVIX down here under 100 is fantastic, and UVXY at a price I haven't seen in a while. We're sub 10 on UVXY. Obviously, this name does reverse splits to keep it, I almost want to say solvent, but so the price doesn't get decimated. But we're at a 52-week low on UVXY. Again, this is the difference here, obviously having options exposure, but also, so does the VIX. But you have a decay factor that goes in with UVXY because it's buying contracts that eventually expire. So there's more of a decay factor with UVXY versus the regular VIX. And also this takes into account, I believe, 30 to 45 days of time. So it's a little bit further out in terms of volatility. So the fact that we're seeing UVXY down a bit more than regular VIX is a good sign as well, because it's giving an inkling that a little bit longer term volatility is coming down and into decay, which is a good thing if you are a bull in general. Toby says, is everyone sleeping in? Maybe. If you're here in the chat, type a hi. Omar says, hey Adam, did you trim open for a loss? Couldn't get the stream early enough. No, I didn't touch open just yet. Again, I'm long the open $8 calls at 67 cents, I want to say. Let me double check before I lie. Yeah, 67 cents. I'm long the open calls right now. And again, they're at the money. So we'll see. This 814 level on open's huge. You got the daily chart here curling up. You have good bull momentum here. I'm sorry. On the daily chart, you have MACD curling up. You have RSI, what I call like my bull bear momentum indicator, over the number I look for, which is a 54. So this can show early signs of a reversal just in terms of momentum here, especially if we could sit above 814 today. So this is something I'm willing to be a little bit more patient on. I was willing to take a trim at the open if we stayed up here around like 840, but unfortunately we came down on the open, so I did not take a trim yet, Omar, to answer your question. Looking to see this 814 hold today and push to the upside from there. HR dropping the Ayo, good morning. Other name I want you guys to keep on your radar is Sabre. This one's very interesting to me because of this chart. Now, I think this might end up being, we'll see if this happens before earnings, but if earnings are perceived bullish on this name, and again, you guys know it's very rare I take a stab on earnings in general. You could set up an island bottom here. If you don't know what an island bottom is a gap down and then a period of price consolidation, building some level of a base, which in this case we have basically like a big old cup here, and then a gap up. That's an island bottom, which is typically a very bullish reversal. It shows that you swept lower liquidity and moved back to where you were essentially. So I do actually see good risk reward here with Sabre. Again, full transparency, I am long some calls on Sabre, so just so you know. But I do see this going back to the $3-ish area, or at least the opportunity for it to go back to $3 area, especially if earnings are perceived bullishly. And again, I always like to say the word perceived because data can come in fantastic. They can make tons of money. They could take over the world and stock goes down, right? And the inverse, they could have horrible data. Everything's horrible in the world, but they said that they're now partnering with Trump coin and it goes through the roof, right? So always use the word perceived. If things are perceived bullish, perceived bearish, that is going to be your best bet. That way you don't get hooked up on, well, they beat on revenue and they beat their on earnings per share. Why is this not $1 million stock? Oh, there's other reasons sometimes, and you want to be aware of those things. So this is an interesting name. Keep an eye on. It is like a travel exposure company. Airlines, hotels, agencies, partners to retail, to distribute, fulfill travel services worldwide. So it is risky in the sense that this is something that is more, I want to say, a luxury brand, right? This is something where people, if they don't have the money to pay for it, they're obviously not investing, but they're not using this company. So as the economy is poorer, your risk here is that people aren't traveling, right? But then again, with how this monthly chart looks, with the exception of this crazy old wick, you're basically near all-time lows on this company. So I think the risk reward here is solid, all things considered. It's just shy of a $1 billion market cap, so it's not like you're betting on a mega small company either. So I think it's an educated earnings bet. And if it pops off before earnings, guess what? You get to take some profit and go risk-free into earnings, which is my favorite thing. Little rule here that I like to have, and I might have shared this on last week's program, but if you can establish a swing play into earnings and take profit before the earnings, and then basically go risk-free into the earnings, that's a fantastic idea. Why would you not want to do that? It's free money. Always look for those opportunities if you can afford them, if they're within your risk appetite, because they will tend to pay dividends for you, at least in my experience, where you can realize your profits, and then you can also let more profits grow if you have that opportunity to let runners run, which is a beautiful thing. Anyway, pin duo. I'm watching this one tight, like I said. Basically breaking out here, trying to break out here. Obviously a little bit of a doji-ish candle here, but basically north of this number here. 136.84, which are just there right now, is this localized high. So I'm looking for that to break and push even harder here. It's got the kind of signs I look for on the daily chart to get a nice little push to the upside here. A little on-ramp to get somewhere in this like 140-ish area sooner than later. Better's at that 814 level. I'm also keeping an eye on Peloton. I know I've mentioned this on the program, and I am currently long some calls on Peloton at this point in time. Currently sitting around the 50 MA. You got this red star coming down on the daily. You do have earnings coming up, and very similar story to open here on the daily chart. Again, if we're just looking at two technical indicators here, MACD's curling up. You've got some bull momentum coming in. Got a nice looking chart here. If you like to draw shapes, you could argue that this is kind of like a bull flag. I would say you'd want volume to validate if it's a bull flag or not. I'm sorry, a bear flag. And with the volume that we saw on Friday and what we're looking like today, I think we're going to find it invalidated, break out of this channel and push near 850 on Peloton. So keep an eye on that. Omar says, cue the it's free money the real estate ad. Was it it's free money? Is it free money? Is that what they say? I know what you're talking about. It's the guy who's like, it's free money. Yeah. It's free. No, he says it's free real estate. Right. He goes, it's free real estate. Yeah. I know what you're talking about. Solid meme. let's go back to the market, and then we're actually going to look at our index, or not our indexes, our sectors to see where the strength is now that we had about 15 minutes of market open. Looking at the daily candle right now on SPY, nothing to see. Zooming in here on the 1 minute. Again, that key level you're going to keep an eye on. Essentially right here again, 682.75, 74. That's your POC for the entire morning, right? All of the volume by price has been traded at that price. So this is like your line in the sand, and we'll make it real simple for you while we're here today. No. Sorry, I got a pop-up. We'll make a nice red line for you. We'll do 682.74. That way we have our, and I like to draw these when I'm live with you guys so you can see in real time. That's your line in the sand. Underneath it, you're bearish. Above it, you're bullish. And I don't mean, hey, play calls and puts above and beneath it. But in terms of a trend, you'd want to see the bulls hold above this, and you'd want to see the bears shove beneath this. But right now, no side's really winning. You're kind of just bouncing around here. If I'm a betting man, I'm still betting on the bulls. With that being said, now that I'm saying that out loud, looking at the daily chart, we have gap twice in a row, so that's pretty lofty. So we'll see. We'll come back and reassess as the day goes on. This might be one of those days where while I'm live for the next 45 minutes to an hour, the price does this the whole day, and then when I get off live, I go make myself lunch, and then it goes down or up dramatically. So it might be one of those days, unfortunately. Can't control the price of the market, but we can control what we can control, meaning what we see on the chart, and we can look at individual names to kind of get an idea of which way we're leaning. And now if we take a peek at NVIDIA, we're near that 191.05 LOI, currently wicked above it twice, looking like we're trying to get some strength to push above it. This is a really good move for NVIDIA, obviously very similar to the SPY price action. You actually gapped through the red SAR that was left on Friday. On the daily chart, looking pretty solid here for a reversal. You're going to want to mark out, as I'm going to do right now, that all-time high here at 195.62. At this rate, especially depending on how the Mag 7 names perform, it would not shock me to see NVIDIA hit 200 before their next earnings. Which, again, it's not a far cry. It's $9 more. But for those of you that have been watching the program, when we were back here, or we around here, when I said we broke this 149.77, I said that we would hit 200 before, I think I said before November. So I might be off on my time frame. My timing might be off a little bit, but I did say when we broke, if we broke this level 149.77, things would be very bullish on NVIDIA, and they were, still are. And looks like we got a little bit of a bull cool down before we get more of a continuation here on the daily. So very nice looking chart for NVIDIA. I will continue to remind you ad nauseum until it's drilled into your skull that Google is your canary in the coal mine. Google is your leader of the pack. Google, as long as Google is good, the Mag 7 are good. And that is continuing to be the case right now as Google makes another new all-time high. Just look at these monthly candles on Google. 1, 2, 3, 4, 5, 6, 7 in a row. Look at that. 7 months ago, this was down at 139, 140. What's the low of that? The low is 140.23. It's almost doubled up since then. That is insane. The other statistic I wanted to bring up with you guys, I found very interesting. Did you know that if we see a green month on the Qs, this would be the first time in 12 years that there were 7 green months in a row? 1, 2, 3, 4, 5, 6, 7. Yeah, there's a 7th green candle. Back in 2013, I believe, was the last time we saw 7 green monthly candles in a row for the Qs. So that is very, very interesting little statistic. Volume's been nice on the month as well for the Qs. So things have been just essentially grinding up. If you're not careful and you're trying to short things, not great. Microsoft, I've been loving the support staying above that basically that red line there, the 512.76. I said as long as we can hold above that, Microsoft looks pretty bullish. We zoom out on the weekly a little bit here. You had that weekly candle close above it. We tested it, closing above and now gapping above basically the height of this general range here. Obviously a risk with earnings coming up, but from their last earnings, let's zoom out a little bit here. You gapped up and then sold off and sold down and kind of consolidated here. So in my opinion, based off of their last earnings move coming down and just kind of going sideways here, if earnings are, and here's the magic word, perceived as bullish, I think you're ready for another leg here to the upside on Microsoft. We're zooming out and looking at things from a longer term time frame. I think Microsoft is actually ready to push pretty hard to the upside here. Will I put my money on it? We'll see how the week goes. Apple, again, at all-time highs. They got earnings this week. Nothing too crazy here. As long as you're north of that 259.24, this is going to remain pretty bullish. Tesla is still pretty tight. It's not that it's bearish. I think it's going to sit here, and I think I said this last week. I think it's going to sit in this range, like sub, and I'm a little wrong. I said sub 440, I think. 440 to 411. I think it's going to sit in this range a little bit longer. So maybe we extend we give a little bit more rope here to like 451, like the top of this candle, 451.68. That was the top of Friday's candle. Give it a little bit more room there. And I think it's going to sit in this like 40-point range here just for a little bit longer, maybe a week or two. Or maybe this is the week it needs with earnings and everything to break out or get denied back to the bottom of the range. But I think it's going to sit here a little bit longer. Obviously, if you're an investor, you have a different time frame. But me as a trader or a swing trader, I wouldn't really have too much interest in Tesla at this juncture, me personally. It's just my take. The risk to reward either way isn't too attractive to me, is what the point I'm trying to make. And again, my personal thoughts. Not telling you to be bearish or bullish. I know people get butthurt if I say bad things or good things about Tesla, so it's just neutral. Amazon, not really moving much off of the gap up here. Again, over 221 solid. What I'd like to see for Amazon, so you're going to want to watch the top of this range here. This kind of, it's not a double bottom, but this weird lopsided W-ish range. You're going to want to see a break around this like 228, essentially the high a day for Amazon here. In a perfect world, I would like Amazon to come down and back test around the 50 MA before bouncing and going to the upside. If we come down and back test the 50 MA, then we get earnings and we hold that as support. This is breaking all-time highs. Now, it's not going to happen right away, but I would be looking to be exposed long on Amazon very aggressively if we stay above the 50 MA and if earnings are perceived as bullish. I think that sets you up for a nice push here on Amazon to make another new all-time high into the end of the year. Meta, kind of a similar story here. That earnings gap was defended, and since earnings, very similar to Microsoft in the sense where, I mean, arguably got a little bullish here, but it came back down, and it back tested that open gap that it had and filled the gap and kind of just floated around before reversing, which is honestly, at least near-term price, pretty similar to how Amazon's been moving. Again, similar, not the same. So I kind of want to see a similar story here for Meta. If earnings are perceived bullish, if it could stay above the 50 MA, then I would see a similar move on Meta here where we make new all-time highs. If Meta, here's the crazy thing, all right, I'm going to say this right now. This is going to be the crazy thing. If Meta can stay over the 50 MA through earnings, pick my words carefully. Yeah, I'll just say it. Meta is going to break 1,000 by the end of the year. Is that ballsy? I don't know. I don't think so. I think it's got the setup on the weekly that it could push here. I think the market's got the froth and the excitement that if earnings are perceived as bullish, regardless of all the other things that are going on in the world, I think Meta sees 1,000 by the end of the year. And a lot of this, and now I'm going to go off on my little diatribe here about risk and whatnot. A lot of what you're seeing in the market right now, I'm seeing a lot of smart people lose money because a lot of them are betting short right now. And you are betting against a steamroller. You are trying to pick up pennies. You're stepping over dollars to pick up pennies right now. The market is going to remain more bullish longer than you can remain solvent. Regardless of what's going to happen, regardless of how overpriced certain companies are, how overvalued they are. And again, like I said, some very intelligent people that I respect have lost money, like betting against names like quantum names or whatever. You're going to have a bad time. There's going to be a time to short. And again, if you can outlast the market and you're risking it appropriately, by all means, if you want to short. But I think you're missing. If you are focused trying to short the market, I think you're cutting off your nose to spite your face. It's Mom, if you're watching, that's a phrase you would always tell me. But you cut off your nose to spite your face, meaning you're hurting yourself because you're missing out on all of the bull move to the upside because you're just focused on shorting it. You're focused on fighting the trend. And as someone who actively fights the trend, and if you're a member in our Discord community over Exclusive Trading, which if you want to check that out, links in the bio. If you are a member there, you know I'm someone who loves to fight against the trend. I hate trend days. I love to time the top and short it. I love to time the bottom and long it. That's like my bread and butter. I love reversal trading because that's just how my mind works. I hate following the trend. However, following the trend on the daily, on the weekly, is pretty important here. I can tell you, from this little 3% correction here, and as some of you may have been watching back in August, I mentioned how I wanted to see about a 10% correction. There's even a video on my YouTube channel about how I wanted to see SPY to 700, but first I wanted to see a 10% correction on the market. We never got it, and SPY at the time was trading at like 660 when I first said that, something like that. We got a 3% correction, and guess what? That might be all you get. That might be the most bearish we get on the stock market. We might only get 3%, which, hey, great. Cool. Let's keep going. Let's keep the party going. And that's what it seems like we're going to see in the market, at least at this juncture. Now, big earnings this week can change things. An FOMC meeting can change things. But in general, until you have a confirmed bear signal on the overall market, you want to be very cautious, basically shorting anything, in my opinion. And again, if you are taking a short, at least make sure your risk to reward is right. I know I personally shorted, what was it, UAMI? I'll show you guys a chart here real quick. Last 2 weeks ago? No, not UAMI. Darn, what was it? Oh, it's not UAMI. It's the other one. Or it begins with a U. If you're in Seed Decree, type in the chat. I know I put it. No, it is UAMI, right? Oh, I wrote UMay. That's why. UAMI. There we go. I grabbed a short on UAMI up here around like 16, 70 bucks, something like that. And I closed it out down here at like, I think it was actually at like 13. It was intraday on this candle. I held that short for 1 day or 2 days. It's a very short-term trade. Now, I could have made more money if I kept holding it, right? But I don't want to be short the market. I don't want to be exposed short in general right now. I want to be exposed long, and I'd rather look for the long opportunities instead of looking for the short opportunities. Now, in a case of like UAMI where you grind it up on high volume, everyone and their dog is talking about how it's the best stock in the world and everything. You've got gap up after gap up after gap up after gap up. Eventually, there's some level of exhaustion, and eventually these things come down, even short term, which is where I took a short opportunity because the risk to reward was greatly in favor of the bears at that point, which is why I took that stab. I'm not going to take a stab shorting the company here at $7. It's silly. So I want to really stress that because I know a lot of people, especially some retail investors, think that they're smarter than the market. And there are many smart people, like I said, that are very smart. And they go, well, logically, just like my brain works, I'm a very logical person. This should be a short. This should not be worth this much. And then they short it. But sometimes the market doesn't work on logic. And I even had a little conversation maybe a month ago now on this program saying, I'm done trying to be smart. I'm going to roll more with the dumb money, right? Because sometimes trying to be too smart is what's going to get you killed in the stock market. Sometimes you got to dumb things down. You got to just roll with the momentum, which is why even when I highlight trades on this program, I'll say this is like a momentum trade. So you have to risk appropriately, but that doesn't mean I'm betting against it, right? So I feel like it's very important to highlight that, especially in this environment where things are very frothy, that there are many, many, many opportunities you can take, but be smart about how you take them, is all I'm trying to say. Guys, do me a quick favor here, because I didn't do my little grift at the beginning. So if you haven't already, please do me a favor. Drop a quick like on the stream if you're enjoying the stream, wherever you are on YouTube, Instagram, X, Kick, and Twitch, wherever you're located on the entire World Wide Web. Interact with the stream in your favorite way just to help support me, help support the algorithm. I greatly appreciate your viewing, your eyes, your ears. It helps me greatly. And if you want to see more of the show, if you haven't already, do me a favor, pop on over to the YouTube channel, hit the subscribe button, because once we get to 500 subscribers, this will be an everyday show. So if you like the show, you like the content, you want more content, all you got to do, pop over to YouTube, hit that subscribe button. It's totally free. Like I said, regardless, I'll be live today, tomorrow, and Wednesday. So if you enjoy the show, please come back. I'd love to have you. Feel free to talk in the chat. We will continue talking in the chat for the rest of the show as well. And I do want to give a quick shout out to you guys that are subscribers. We broke 200 subscribers over the weekend. Now we're actually at 205. So I appreciate your support, guys. Thank you for liking, supporting, sharing, whatever the channel. I appreciate it greatly. And I hope, most importantly, you guys not only find some entertainment here, you find some education, and maybe you make a little money along the way. That's the trifecta. That's what I want to give you guys right here on the Atomcash angle. Thank you again for your support of the content. Omar says, that's true. People who hit their shorts are more of a clock is right twice a day kind of people. Hashtag Michael Burry. Yeah, so Michael Burry, if you guys don't know, he was the guy who did The Big Short, right? There's a movie about him and everything. The other times that Michael Burry has tried to short, and this is not me taking a poo-poo on Michael Burry by any means, so let's get that out there first. I'm not saying he's a bad trader or anything like that. What I am trying to say is shorting the market is very hard. You are betting against the odds of what the market has done in history. So let me show you guys. This is brilliant, right? This is the no other influencer, guru, trader, whatever you want to call me or anyone else is going to show you this, right? This is going to blow your mind. This is the S&P 500. I've said this to many people. This is a monthly chart of the S&P 500. Right now we can see all the way back to 2011. Actually, let's go yearly. Can I go yearly? Do I have yearly? Yeah, I got yearly candles. All right, guys. So this is the S&P 500 yearly candles going all the way back to 1993. 32 years of price action here on the S&P 500. Where do you see, with the exception of obviously terrible events, you got the dot-com bubble, the financial crisis, COVID. Where else has the market had a sustained and severe drawdown? Where if you just took your money, you put it in your hand and you threw it at the wall, if you bet long, you win. And especially if you bet long and you waited long enough, you still win. The market has never come back down to $32 or whatever, right? You would always win as a longer term. Again, it depends on how you expose yourself because the S&P 500 is a collection of the 500 largest, best performing companies in the United States. Why would you bet against that? Here you go. Here's the big tip, guys. If a company that's in the S&P 500 sucks, guess what? It's kicked out of the S&P 500. And then guess what? The next new and rising star, the next hot stock is put in the S&P 500 because it's basically designed to just go up and to the right. That's it. That's what the S&P 500 is built to do. Go up and to the right. Because if you are underperforming and you're in the SPY, you're in the S&P 500, guess what? You're getting kicked out. It's different than the IWM. It's different than NASDAQ. It's different than the Dow, whatever other index you want to look at, because this is consistently the best of the best are in this ETF, SPY specifically. So if you're someone who likes to short the market, you either got to be your timing exactly right or you're a short-term trader, right? Which is no shame there. But for someone, and again, not poo-pooing on Michael Burry, not that he cares what my little channel says about him, but if you're someone who's going to keep loading shorts and loading shorts and loading shorts, not only do you have to have a ton of confidence in your position, but you better hope it plays out sooner than later, because if not, again, the market will remain irrational longer than you will remain solvent as a bear. That's why I always say, especially if you're a newer trader, if you're a newer trader in general, do not even think about buying puts or being a bear. Because in general, the market is very forgiving to bulls. It's very forgiving if you buy call options or sell puts. You typically have, as I like to say, the wind at your back. The market supports the move that you're making, right? You typically find extra support there because the market typically goes up and to the right. So you don't want to go against that juncture if you don't have the strength, if you don't have the very strong trade thesis or the experience to do so, right? It's so important to understand that concept because so many people think in their brains logically being a bull and being a bear are equal sides of the same coin. It's a 50-50 split. I'm either bullish or I'm either bearish. I'm either long the stock market or I'm short the stock market, right? But you carry extra risk when you're short the stock market. Not only are you betting it goes down, you're also betting everyone else that's short the stock market stays short the stock market and does not get squeezed. They don't close out their shorts because when they close out their shorts, now they're now long. So now you're even more underwater because now people who used to be bears are now bulls and they're betting against you. Whereas when you're a bull and things go down, you don't get bull squeezed to the bear side, but by definition. There's no margin. You're not borrowing, right? Or there's no margin in the sense that you're borrowing to be a short. You don't have to locate shares, etc. There's not that extra risk when you're a bull. So I always will stress that. If you're a novice, you're a new trader, you're trying to learn, don't even be bothered with puts. Don't look at puts. Don't look at shorting stock. Don't care because you will miss more opportunities trying to be short than you will gain by looking to be long. I mean, I should have recorded that. That would have been a solid little pep talk for people. Strange Maker says, I've always said too that if there were to be a drop that dramatically and crash full on bear, we would have other major issues going on to worry about. True. Very true. The other thing I want to highlight as the market just pushes here, new all-time high. One thing I want to highlight to you guys, this is where I missed out, me personally, right? This year, I didn't take advantage of this. Other people did, God bless them. I didn't. When we had that tariff drop, right? Even if you just longed the SPY, you'd be up $200 a share. You'd be up, hold on, let me do some quick math here. You would be up 42% on long equity on the SPY if you got in around the low from the tariff time. And even from that tariff drop, if you bought basically any stock, you bought Microsoft, Nvidia, Apple, any of the Mag 7, those have all basically doubled from this point, right? Unless you're short up here and you close out here, which is a very quick trade, right? The opportunity there on the lows is to be a bull. Because if you're patient, you'll make a lot of money. The last bit of information, I'll get off my soapbox completely on this topic. And if you remember the Discord, you know this, I say this all the time. Bears take elevators, bulls take escalators. Bulls slowly move price action to the upside, or over time will slowly move price action up. Bears drop it down real quick, typically a reversal. Even in a bear market, feel free to fact check me on this. In a bear market, there are more green days than there are red days. Fun fact. Because the red days tend to be violent price action, big drops down to the downside very quickly. But that's why I said, in general, bears will take an elevator down, hard falls, and bulls will take the escalator up nice and slow. So in general, understanding that, if you're betting as a bull, you better be right, and you better be right on time too. I'm sorry, if you're betting as a bear. And I will now get off my soapbox about being a bear and being a bull, which I think is an interesting or an important conversation to have specifically this week. As I alluded to at the beginning of the stream, this is a very big week in general for the overall market as a whole, due to the fact of all of the, well, we got Mag 5, right? We have 5 of the Mag 7 reporting, plus FOMC. You have ECB's rate decision as well on the Thursday, and a bunch of other bigger names also reporting earnings. It's a big week. You don't want to be just, if you are slinging money at the wall, I'm telling you, you'd prefer, in general, to be slinging it long. If you're being dumb and just throwing money, you don't want to be short. That's it. Anyone disagree with that? I'm just curious. Anyone have different feelings about what I'm saying here in the chat? Let me know. Ooh, those path calls. Those path 20 calls are up 34%. Looking good, looking good. Grab, guys, we talked about Grab on the program. It's a stock you guys know I like. I actually got back into Grab. I think I said in the last episode that I was out of Grab and I was looking for a retest. I got back into Grab. I'm currently long on Grab at $5.92 a share, currently trading at $6.04. So this is one you want to keep an eye on, especially through earnings. Got a similar setup to a lot of these names I'm looking for. Again, if you're just looking at MACD and RSI, but if this daily, we just broke the daily red SAR, this is solid. If it breaks over the 661 with how the monthly is looking, it can have legs. It's also a bigger company though. $25 billion market cap, so it will move a bit slower, which should be a good or bad thing depending on your risk appetite. So just be conscientious of that as well. If you guys have any names you want to drop in the chat, feel free. We'll take a peek at them. I do want to highlight again another name we spoke about on this program, Crocs. You guys know I'm bullish on the rubber shoe. So I alerted this long. I believe I entered it live on the show, and I averaged up on my holdings here. I have a $78 average right now, currently trading at $85.70. I love this name. I still love this name. As if they nail earnings, if they hit which is this week, if they hit earnings out of the park, this thing's going back up very quickly. Very, very quickly. How their fundamentals look right now in general, if they can just sustain that again, even if it's just like the same thing, obviously companies want to see growth, but even if that data stays relatively the same, this is long-term going back up. I know it's a stupid rubber shoe, but I've invested in weirder and worse. And so far, we're doing pretty good on Crocs. SPY right now has broken above pretty considerably that 682.74 kind of price discovery point after, what was that, about the first like 20 minutes of the market open here. Now kind of sitting like a high and tight flag here. We'll see if we break to the upside. So keep a tight eye on SPY. Get rid of those. We're not watching that anymore. Keep an eye on IWM, which is sitting relatively flat in comparison to the market, which tells me that we're probably seeing, So we are seeing some level of divergence, again, between IWM and the Qs. We actually might be getting back on track here. So the ultra golden bull signal, right? You have the Qs, you have IWM, you have SPY, all moving in the same direction, up and to the right, while volatility goes down and to the right. If you get those four things aligning, you're looking pretty solid. Now, I don't really think volatility is going to get much lower. It could, but I really don't anticipate volatility getting much lower. In fact, I kind of want to see volatility sit north of 15 essentially all week. We have a very volatile week, so probably will get bumped up to the 1637. But I want to see it just bump around in this like mid 15 area. If we stay in the mid 15 area, especially just intraday today solely, and all three indexes go to the upside here, we're going to look for a very bullish day here, short term on the market. Just talking about the daily chart, today's price action alone, looking pretty solid here in my opinion. VVIX also still coming down, which is a good sign. NVIDIA did reject that 191.05 LOI, leaving a ton of wicks up here. So you can see how valid this price action is, or this LOI, how important of a level this is. Now trading near open / the low a day on NVIDIA. Pretty harsh rejection there, actually coming down. Hell, this is a great example. Remember, we just talked about bulls taking elevators and bears taking... Man, I'm screwing it up my own saying. Bears taking elevators, bulls taking escalators. The bull move here, theoretically, took from 931, and we comfortably got there around here, 957, comfortably, right? And that took about 30 minutes. The bear move took 10:05 to currently 5 minutes to give it all back. And now you made a new low a day. That's why I said, in general, if you're a bear, you want to focus on quick falls and get your money and get out kind of thing. It's rare that things stay bearish for long, in general. Obviously, there are news catalysts and other things that can happen that can cause a prolonged period of bearishness, but in general, you don't want to overstay your welcome as a bear. And this is coming from someone, hold on, let me get my statistic here, because I've tracked it for the last year. I've shorted the index 154 times in the last year, and of those 154 times, 141 of them were successes. Which means I have a 91.55% chance of being right when I take a short on the overall index, because I'm very, very, very particular when I take a short on the index. And normally, those trades turn around real quick, go green real quick, and that's what you want to focus on if you are looking to short. So now for me, what am I interested on the day? Will I even take a day trade? Well, we'll talk about that here in a second. Tesla's near that 450-ish range that I said would be the top of its range, so keep an eye on that. Not really, obviously a big gap up, but not really any sort of I don't love the price action this morning. It's not bad. It's just not. It's okay. Crocs is looking good, like we said. But it's just for a gap up, obviously. It's a big gap up. I think it needs to sit up here for a little bit longer. I think you're actually going to have a head and shoulders form here on the SPY where this is going to act as the head. You're going to come down and consolidate again on that 682.74 area. And if that doesn't hold, be very careful intraday here. Because remember, you still got that big gap below you and another gap below that. So I'm not being bearish. I'm just saying these are the things you want to assess in terms of risk. Now, I want to talk about for a second risk to reward, because I'm be honest with you guys, I'm probably not going to take a day trade right now, so if that's not your interest, sorry. But I do want to talk about where you could find opportunity this week and in the upcoming weeks, okay? I'm, as I alluded to, and I know not everyone was here, so I'll re-say it for those of you that come in late. I have been loading what I like to call my swing cannon. And my swing cannon is where I expose myself long, typically, with more trades than I normally like to for swing exposure, because I see a better risk opportunity swinging than I do with short-term trading. And I'm someone who, obviously I have investments with just regular equity. I'm someone who day trades quite a bit. And then also I have some swing exposure on the side. Typically my day trade volume's higher and my swing trading volume's lower in terms of dollars. But I'm actually, there's times where I want to flip that switch, because the opportunity can shift to the overnight. And if you don't know this, most of the gains over time are actually in the overnight session. There are certain times where I think the market sits a certain way, especially on individual names, where you can make more money playing a swing position, obviously depending on Greeks and how close you are in or out of the money, that are more attractive. And even if you don't like that idea, swinging equity, that are more attractive than focusing on day trading or having positioning yourself to day trade more. I think this is one of those environments between now and the end of the year. We're not too far off from SPY to 700, so I feel like that's not really like a big call now. But I do still think that we see SPY to 700 by the end of the year, as I said back in July or August, whatever it was. And now we're getting near that point. I don't think we're going to see that correction anymore. This would be the week that would happen, right? If we get a correction on the market, I mean, it's already happened with that 3% drop, but this is the catalyst week for it to happen. If it was to happen, it's going to happen with Mag 5 reporting, with FOMC. You got a double whammy of massive, massive catalysts. So if it was to happen, it's this week. If everything goes off without a hitch, meaning if the SPY and the Qs sustain somewhere around where they are, even if they come down a little bit, if they somehow, in some way, support justifiably where they are, and if IWM in general sits north of like 249.60, we're just going to keep rocketing to the end of the year. Very, very confident of that. As a result, I want to have swing exposure overnight in certain things that make sense to me, right? In certain things that companies that I like that have growth exposure, because I believe we're going to enter a period of market froth, right? Where people get overly excited, people invest in memes and whatnot. And we've already seen some of that, but I think that's only going to get hyper exaggerated here between now and the end of the year with Santa Rally and everything, right? Good feelings going around. I think we're going to see more of that as we head into the end of the year. And a lot of the opportunities I've been highlighting to you guys on the program are not even necessarily high risk opportunities. Obviously, it depends on how much time you buy if you're buying an option. But they're opportunities where the risk to reward greatly favors if you were to be a bull, right, and take calls or whatever. Or if I highlight a bear position, if you were to be a bear. So the risk to reward makes a lot of sense. And those are the kinds of swings you want to hunt for and sniff around for in this environment. Calls that have a lot of money flowing in them, where charts look solid, they're a hot name, they're a momentum name that people like right now. Those are the kinds of things you want to start sniffing around for, because those are the names I think are going to strongly outperform the market in general here in the next 2 months. Prefacing all of that by saying this week will be a very big decision week. And it looks like today may be just kind of a fluff around and find out kind of day, when I mean we're not really going too much of anywhere due to what we're looking forward to for the rest of the week. But that's where my head would be at, and I suggest you consider you putting your head at, if you are someone who's more of a day trader, that you focus more on some some medium-term swing opportunities. Looking at things that would perform theoretically before the end of the year. That would be my suggestion for you to consider if you are someone who's trading the market actively at this juncture. That's my 2 cents there. It's looking like a pretty dry day right now. Looking like a pretty dry day. SPY is back to that key level. So now, if in general, what I would be anticipating here is some level of consolidation above it. Then you're running the risk of having a potentially head and shouldery look intraday. So you want to be careful of that. Obviously, a very similar chart here on the Qs, or maybe not obviously. And now it looks like IWM is back on track with the market, with the Qs and with SPY, but it's not necessarily a good thing because we're all moving down right now. As volatility moves to the upside, I know we didn't have any planned news, but let me just double check and see if we didn't get anything come through the news blotter. By the way, the market is still in fear. So those of you who look at the fear and greed index, currently today we're sitting at a 39 out of 100. For context, 50 is neutral. Greed, you start dipping around like 75, and extreme greed obviously is 100. So right now we're sitting in a more still fearful market at all-time highs, which is interesting to say. Ooh, Qualcomm apparently got a pop off of unveiling an AI chip to rival NVIDIA in the data center market. I hate Qualcomm. I hate that stock. I hate Qualcomm. Well, we'll take a peek. Woof, look at that. 18%. Oh, chihuahua. This thing rocketed. 169.86 just straight up. Woo, look at that daily candle. My top line LOI here is 204.48. Wow. All right, Qualcomm. That's a monthly, that's what I call a monthly star break. You just broke the SAR on the month here for those of you that love this indicator like I do. That's a monthly star break. Wow. What a candle. 19% on the day. Anyone dare me to short it? Wow. How expensive are these? These are pricey. 52-week IV at 54. IV right now 120%. Whoo. Damn, I said dare me to short it and it started going down. I wouldn't. If I was to take a short, it would be at 204.48. But this IV is nutty. You know what I could do, though? All right, pop quiz for the chat. If I wanted to initiate a short position on a stock, and I also wanted to be short IV, what strategy could I do to be short IV and also initiate a short position at the same time? To give you a double whammy. What kind of trade would I do if I wanted to be short IV and also short the company, the stock? There's a specific strategy that you can do that gives you that exposure. It might be very hard to get done on a two-legged strategy moving this high because I'm looking right now, the legs are wide. On a two-legged strategy, you got a $4 spread. That's nuts. That is nuts. But what would I do? Outside of just shorting shares. Oh, we hit it. What would I do? See if anyone knows the answer. There's one specific strategy. You could short the stock and also short IV, which would be the most beneficial trade I could take right now if I wanted to short Qualcomm. They also have earnings this week. Earnings are next week. Okay, so I could do a weekly. Here's the hint. I don't know if I'll get paid enough to do this. Omar, you're half right. Omar says spread. Okay. Call bear. Yep, call credit spread. So through a call credit spread, I can establish a bull position. And since it's a credit position, I'm getting paid, right? So as a result, since I'm getting paid money, that means I want those contracts to depreciate as quickly as possible to gain as much money as I can. Consequently, if IV is high, if IV is jacked up, so are the premiums, which means I'm getting paid more. I'm getting paid a premium for the premiums, right? Because those contracts are so lofty, they're so expensive. As price goes down, or even as price stabilizes, I'll be able to theoretically close out the position for more money because I'm capturing IV decay and also the price going down. It is a win-win. I'm just debating if I want to take the stab. It's risky. Risky, risky, risky. Tell you what, if I can get $2 for it, it's a $5 spread. So that's a big spread. I'm going to look to open a call credit spread 205, 210. So that means I'm going to be long the 210, short the 205s, and I'm going to see if I can get a $2 credit. And I'm even going to put this through on our seed to tree accounts, our small account as well. So I'm going to see if I can get a fill here. The spread is super, super wide, but at a $2 risk, I'd want to take it. Cheaper than that, obviously could still work, but I want to make as much money as I can off this risk. I'm shorting a hot name right now. I'm shorting a meme, so to speak, right? I'd want to make sure I'm getting paid enough to take that risk. So if I don't fill for $2, and that would be a credit, I'm getting paid $2, right? Then I don't want it. Because it can also go against me, where I don't get paid enough, and I have a $5 risk. So my risk reward is actually upside down in this scenario, because theoretically, I never want to risk more than I can lose than I can make. But in this scenario, because IV's high, I'm willing to take a little bit more risk. Because the 205 and the 210 contracts are so much more expensive right now, then I can actually make a little extra premium on them. So that's why that risk makes a lot of sense here, because theoretically this contract could expire, or I could lose $3 since the $5 spread and only stand to make 2, which means my risk reward's upside down. However, because I'm also, at least right now, it'd be $10 out the money, it'd be worth the risk if I can get a fill. If I can't get a fill, it's okay. C'est la vie. There'll be more things to do. Crocs pushing up 4% on the day, 86.33. And again, I'll reiterate in case you have interest in that trade, which is not filled yet. I would tell you guys if it fills. It would be long the 210, short the 205s for Qualcomm for this week for a $2 credit. If you don't know what you're doing, you probably shouldn't take spread, so don't consider. Do not just buy puts. It probably won't be a fun time. All right, we're getting my worst case scenario here on the SPY right now, kind of making that head and shouldery kind of look a little bit. We don't want that. So careful, very careful here. Open, very similar look to SPY. Came back up to around that pre-market high of this 830-ish, 840 area and coming back down right now. Again, looking to sustain over 814 on the day. IWM, again, seeing more weakness than not. Sabre is at 215. Where? Oh, did I time my drawings? There we go. This 225, just so you guys know, 225, and around this 215s also can be treated as a trigger, but this 225 area is a big trigger. This is what you're going to look for that upside push that we're looking at. Omar says the mid is already at $150. Yeah, no, I know that it's huge. The what do I have? Yeah, I've got bid-ask spread of 165 to 95. So you're still at a whatever that is, 70-cent spread, right? It's still a huge spread. Huge spread. Which also means I'm going to have a nightmare getting out too. So I want to get paid for my nightmare. I want to make sure I'm getting paid for the nightmare that I'm going to put myself through and get enough money for it. Where is my... There it is. Oh, did I not alert that? Whoopsie. I should have alerted that. Sorry, Discord people. I trimmed some LBRT. I was distracted. It's still around where I trimmed it. Sorry. 48%. How do I write this? Delayed. Sorry, I guess I forgot to type it here as well. Trimmed some LBRT at 48%. It's still around that price. There we go. Okay. Doing too many things. I'm juggling too many things at once. Too many things to look at. How's my pen duo doing? Just a doji. A lot of, I mean, just in general, every chart I've clicked on so far in the day kind of seems like a head and shouldery look, which isn't fantastic. I don't think I'm going to get my fill on Qualcomm unless we cool off here and backtest a 204, basically backtest high a day and then fire down. We're going to keep a tight eye on this because if I do get filled, I obviously want to let you guys know. Still the worst case scenario for the market. If the market doesn't stay over this red line in the next 5 minutes, I would move very risk off on the day. I got to get above this in the next 5 minutes or so. Otherwise, we're looking at again, potential head and shouldery kind of price action here where it fires down. I really don't anticipate a big move today, as I've said before, but that when I say that, it typically waits until I'm done with my stream, and then midday when lunch hour comes, we push up or down one way or the other. So we'll see. As I say that, the market gets a nice little candle here. Heard my silent prayers, and now it's going back up. Love to see it. All right, Qualcomm. You have it in you? You can give me $2. See, even if I can fill it $2 and close out, right now that mid on the call credit spread's at 90 cents. So even if I tap $2 and it comes back down to this range, that's still going to give me a 50% gain. That's why it makes sense to shoot for a higher limit here. If I get filled, that's a very specific limit where if it comes down even a little bit, cools off, I'm going to be able to walk with a good chunk of change here. So it's worth the risk to reward if I can get that fill. All right, SPY in a little bit of push here. It's good to see. Let's pop back to our individual names here. Q's pushing back to the upside, almost near the high day again. That's good to see. You're going to want to see IWM participate here. It's not yet. And the VIX is still moving to the upside. So the VIX has actually formed some level of bull trend here ever since like 10 o'clock. Broke out over previous highs from 937 and is now kind of still grinding the upside with the exception of this last candle or two here. So you do want to be a little cautious here. Like I said, I don't anticipate volatility breaking, at least 1637. So there is a chance for a small markup here. But I really anticipate volatility to bounce around like your mid to high 15s for the rest of the week. Nothing like crazy. Because volatility, all things considered, should be somewhat elevated considering the kind of week that we have. Conversely, because of how the market is and where it's trading, volatility should be lower. So there's kind of like this weird in-between where I think we're going to see volatility stay sticky around like, again, mid-15s through the week as a whole. We'll see if that holds constant or not, or holds true in general. NVIDIA around 190 here. Google basically flat on the day. Nothing to see there. Microsoft looking like it could get a little bit of a push here pre-ER. Apple, nothing to write home about. Pretty dry. All right, this is the top of the Tesla range. Like I said, 450, 451. I'd be cautious above that. However, if it does break that with volume, then you probably get a good push here. Because you could have arguably some level of like a flat top break here, excusing this much of a fall. But because it's moved up on earnings, we kind of excuse that. So you could have some level of like a flat top breakout here as we've tested this general area 1, 2, 3, 4 times. So this will be the 5th tap in this general area around this 450s. So if it breaks that, you could get a nice push here on Tesla. Could be a solid push. Could also be a spot for rejection, obviously. Amazon kind of mimicking the market here. A bit of a head and shouldery kind of look. And Meta a little bit more bullish, just kind of sitting around the 50 MA here on the 1-minute chart at the moment. Nothing really catching my eye, to be honest with you guys, except Qualcomm and potentially getting a call credit spread. That is the most attractive thing I've seen so far. So interestingly enough, as we're talking about IV decay and whatnot, as these contracts have moved up from this low here, this is how strong IV decay is already. The mid price on those strategies, which obviously this is refreshing in real time, so this can change. But the mid price now is at 75 cents, where down here, when it theoretically should be worth even less, was 90 cents. So they've actually lost value, theoretically moving to the upside when they should have been gaining dollar value to the upside, which is interesting to see. So that's telling me that IV decay has already started and is already some level of pretty aggressive. But again, I want to be very specific here. I want to shoot for at least some level of a higher payout with a further out the money contract to cushion any potential extra risk here. Otherwise, I don't take the trade. It's not worth it then. All right, guys, this might be one of those shows where it's just kind of dry. It might just be one of those shows, unfortunately. How's my UUU getting hammered here? Watch for 1890 on the day. Again, this one's going to be a little bit more volatile for any of you looking at UUU. That's so hard. It's annoying with the 4 U's. I'm going to 3 ticker name. UUU. It's the same letter. So this makes sense that it's down right now because of the US-China trade deal. This is going to typically be more bullish if there is no trade deal than bullish if there is a trade deal. However, with that being said, this is the kind of company you want some level of exposure to if you think trade deals could cease for whatever reason, or if you want to bet on the U.S. building their own means of rare earth reliance on ourselves with uranium. If that's the kind of bet you want to take, then you may want to consider some exposure in UUU. Again, full transparency, have weekly exposure here. Today, if it doesn't stay above 1890, I'll be closing those out for a loss. Again, full transparency, I don't win them all. But this is a very volatile name. It can whip around very, very quickly. But this is essentially where I was looking to risk it about 1890 on the daily. So if we close beneath us on the daily, I'll be out of this name at least short term here. And again, made sense at the time to take some stab here, and it may still work out. We'll see. There was over, I don't know, ridiculous amount of money trading on a ton of UUU calls, which probably was speculation for that China US deal, which makes a ton of sense. And it's one of these trades that, again, you look at high risk, or not even high risk, higher risk to reward ratio for a bull, even though it has been extended to the upside, right? Even though it's hot to the upside, there still could be that opportunity there, right? Trading momentum. And like I said, don't sleep on pin, duo, watch the high day there. All right. I don't really have much to say. It's kind of very dry. I guess we'll wait here and see if I get filled on Qualcomm. Bid-ask spread on Qualcomm. Let me refresh this. Get filled. No. I've got a $1 to $1.90 bid-ask spread, which puts your mid price around $1 as you push the highs. So again, I may not get the fill on these, and that's fine if I don't. You know what I'll do at this point? I'll actually cancel my order here, and I'll wait, because if it does break, so I canceled my order, so I no longer have a pending order. If it does, because I'm not going to get the fill here, the reason why I placed that $2 fill is I was hoping I would see some level of a wick like this, like a sharp move up to get my fill, and then it just slowly moves down. That's the kind of like risk I want. If we're just kind of grinding up here and we're tapping this key LOI here, and if it does break, then it may just trot up to the upside there where I could get a better entry higher and get paid more if I do want that exposure. So at this point, I won't have a pending order because the trajectory has slowed down, right? We're not pushing up as hard. If we get another leg here, then I could consider a potential short, again, via like a call credit spread, which the IV, look at that. When I first talked about it, the IV at the money contracts was about 120%, I believe. We're already seeing like a 25% drop. If you guys know anything about IV, that's massive. A 25% drop in IV is huge. That's a big fall in implied volatility. So that is very interesting to see already. And it just shows you the power in real time on why you got to be careful if you're trading a name that is volatile and you're buying to open contracts. You got to continue that volatility. You got to keep betting on more volatility, or you got to bet that you're in the money and you stay in the money. So there's a multitude of things to consider if you're going to trade momentum. Anyway, guys, I think I'm going to wrap it up here for the day. We're around the time when we normally close up shop anyway, at least for the stream. I think we might do a Power Hour show. We're going to do a Power Hour show at some time this week, and then we're also going to roll it into Atomcash After Dark. It's a new little program I'm working on that's going to be an after-hour show. More focused on individual names charting, kind of like we do on this program, but we don't have the extra noise of the market being open. It'll be more educational based. I'll have questions already submitted or that you guys want to submit that we could talk about, and more time where we're not necessarily following the market minute to minute here like we are on this show. But we have the time to sit and talk, so to speak, and discuss more complex subjects. If that's something that interests you, make sure you stay tuned. If you haven't already, pop on over to the YouTube channel, hit subscribe, or follow me there on X. You'll get all my updates there. And with that being said, guys, some will say you need an edge to trade. Well, I like to look at things from a different angle. That is always what we get right here on the Atomcash angle. Hope you guys have a great rest of your day. Please remember to trade responsibly, especially this week. And as a reminder, I will be live again tomorrow and Wednesday at 9:15 a.m. for this show. And again, stay tuned on my other social medias. I will announce whenever we're doing one of these other shows. I'm just kind of waiting on a few things. So it's going to be fly by the seat of our pants. Hopefully you stay tuned and you tune in. Have a great rest of your day, guys. I will see you tomorrow morning.
The time has passed, and that's a wrap. You're armed with the angle and your plan of attack. While the show is at an end, your journey continues. We lit the fuse.